is breathing down my neck all the time. Like, look at this guy. He's ready to breathe down my neck now too here. There he is, Rob Friesen. He even got dressed up, and it's early in BC right now.
Well, you didn't want
5:30 in the morning.
You didn't want my yellow pajamas, did you?
You said you were going to wear your yellow pajamas, Rob.
Rob, what's going on, buddy?
Well, glad to see that the market factors in everything that it knows or can anticipate. So regardless of the consensus, I think the real money anticipates that things were going to be in that sweet spot there. So
talk about, how your traders are performing in this environment. I'm one of those traders, but you obviously have a lot of traders, and we know Dennis, Trading does a lot of different strategies. Can you talk about that?
I think Dennis, you could work a little harder maybe. And
I need to work harder.
I mean, you know what? Didn't all our traders say back in 2001, I wish I would have made more of that .com bust. And then same thing in 2007 and 2009. I wish I would have made more of the volatility. And so there's a lot of regret when you look back, because these times in life don't last that long. I know it's media driven, it's fear driven, it's high volatility right now that is bad for investors, but it's the sweet spot for traders. And you really got to roll up your sleeves and make the most of it, because it doesn't last forever. And let's say the market does correct to say 1600 on the SPX and erases the last 13 years of the bull market. It's going to be a very different trading environment. It's going to be, you don't have such juicy premiums in stocks. Things will be quieter. Volatility may drop down to, historically low levels again. And so there is an opportunity for traders to really roll up their sleeves and make as much money as possible.
Strike when the iron's hot. How do your traders trade differently than, a lot of other traders out there? Talk about, you don't have to go into specific strategies, but just talk overall how your traders trade differently.
Well, for the most part, I would say that you're very rare in trading individual stocks, Dennis. You also trade pairs, but mostly we're long short focused. So it's all about relative performance between your longs and your shorts. So you may touch a lot of ideas through the day or even overnight, but you're going to be hedged. And so everybody always discounts that and says, well, I could have made twice as much if I had just been one-sided. Well, that's great in hindsight. But like you said, now you don't know for sure where we're going to go from here. We can't predict the future. The human ego wants to predict the future all the time. Talking heads always pull these numbers out of where things are going to go and what they're going to do and where we're going to be up. I guess they're all going to be wrong this year because nobody anticipated this suddenly event of the coronavirus hitting us, right? So all those projections are fine and dandy for cocktail parties, but they don't really serve a purpose for
Rob, let me hop in here just 1 second here. Sorry to interrupt you. Just made a little bump to 24.45, folks, and 24.50 here. That's mid-range on the session. You know how I love those levels. So there's going to be your whoosh up, folks. Keep an eye on it. 24.50. We are 8 points away from that. Go ahead, Rob. Sorry about that.
No worries. That's great. So we're seeing some of the same kind of numbers from some of our long-term traders that we had back in 2008. So this volatility is very healthy for our style of trading anyway. And again, relative performance, whether you're sector-based or whether you're macro-based, look at when this thing started to hit, look at all of the discretionary names that were kind of a no-brainer in terms of, well, there's probably not going to be as much money to go around in in discretionary spending, but we got to eat, and we certainly need our toilet paper. So I mean, the consumer staples, look to shine a little better. So just the macro focus of long and short can really do well, and also just sector based, the discrepancies that you find. There's so much mispricing when volatility is high. Now you do have to cut your size down because, you can get run over pretty fast. I was talking to one of our traders yesterday that, was trading something that had, you know, a $7 ATR, which normally has about 250 ATR, but it has
Define
expanded.
ATR for our listeners.
ATR is just a good measuring stick of volatility. So it's called the average true range. Yep. So it dials into what the characteristics of the stock actually are, rather than just looking at you know, sort of what the price is or whatever. So I recommend, even if you're doing long short strategies, that you consider the volatility of each stock as well as the volatility of the market. But this helps you control your relationships a lot better than just doing dollars. So if you were like, you know, $100,000 long, $100,000 short, that wouldn't speak into the volatility at all, right? I mean, if you had a $100 stock that moved $1 a day versus a $100 stock that moves $10 a day, and you balanced capital between the two, you would certainly not be volatility bound.
Hopping in here real quick too. I love that the average true range, because it gives you like I mean, I know there's a lot of VIX people out there and different indicators and stuff, but you know, you could feel it. You could feel when it's heating, it's getting larger and larger and larger. And you know, one thing I've talked about in this market is things calming down, and our average true range 9-day for the S&Ps did come down yesterday from 205 to 189, and I anticipate that coming down again today. We've had a 95-point range here, so I think we're already starting to settle down. But that's a good point there. Thanks, Rob.
Well, I mean, this thing has, you know, a Fed and a POTUS inspired, you know, rally here for the most part, and you know, whether that will remain. I mean, if you look at the jobless thing today, is that all? I mean, are we expecting a lot more down the road? And what does that mean? Can we open our businesses on April 15th, or is it going to be much longer than that? When you look at the real ramifications of the contraction in GDP, this movie that you're seeing here feels like a movie some days. You know, may not be over. I mean, this might not be, you know, a quiet little settling down and everything's over. We could have a serious move down again. So that's why I like to encourage people to really focus on their relationships. I think there's so much power in relationship-based trading. Just simple thing is, maybe you don't want to trade pairs, but at least know, you know, what the correlation of your stock is to the S&P. So for example, again, I addressed one trader that was struggling a little bit, and he was buying for a rally a stock that only had a 43% correlation with the SPY, right? So if you're buying a stock on a day that you're expecting to get some juice out of it because the market's rallying, that's going to be a lagging stock. It's not going to be that, you know, sensitive to the rally. So you have to look at your volatilities. You have to look at your betas. You have to understand what you're trading. To some degree, it might feel like a little bit like back in the day when you could trade a symbol and you didn't really know what the company did. Okay, maybe you could trade a symbol and you don't know what the company does now, but at least understand some of the metrics that apply to it, like volatility, like beta, and that will help you select instruments much better. So it's not just about your indicators. You know, you're looking at a floor, you're looking at a breakout, you're looking at a pop. Well, great, but what gives you the confidence that the stock is actually going to follow the market? Because at the end of the day, did we not see a sea of red on the down days? Like everything's red except maybe Clorox, you know, I mean, because it's you know, used to clean all this stuff. You know, Amazon, we've seen it up on certain days.
Yep.
So
we got a 49.50 print in there, folks. 24.49.50. Missed it by 2 ticks here, but I don't know. If we go up there again, I don't know. We'll see what happens. Back down. Just take 24.30. So 24.30.75 was the low of that last 15-minute bracket here. So man, a clear battle, a battle royale between the Bulls and the Bears here. And we're still about 44 minutes before the open.
Rob, talk about timing. Like, how do your traders, come in here and, where are they most active? Like, I know I'm very active at the open. There's other traders who are very active during the day. Some traders are active at the close. Talk about, where your successful traders, where are they most active? Are they just, holding? What's the time frames? Are a lot of your traders holding stuff overnight? Like, a lot of people believe day trading firms don't hold stocks overnight. I think there's a lot of traders that hold stuff overnight. Talk about, different time frames for bright traders.
Well, predominantly everybody's really looking for mispricing or a pricing that, is in relationship to something else is mispriced. So pre-market is a good opportunity, although the risks are higher. And, certainly if you're having orders out there, resting orders, you could be picked off very easily by, a news item that hits and somebody's faster than you can't even cancel, that kind of thing. So you got to remember that pre-market and after the market extended hours are more risky, and there's no price protection for you. But our traders like to focus on those anomalies pre-market. They like to focus on the opening auctions and the opportunity around that. And the opening and close are very liquid environments for you to participate with. And that's a time when the high frequency is not in that print necessarily. So in terms of predatory practices or slippage. So opening and closing are great. And then during the day, there's, still the first hour is where a lot of people make most of their money, just because that's, you're really running at peak volatility in the first hour. You've got, primary trend, counter trend action, things like that. And then after hours, again, there's a lot of news coming out. So you're going to have to be better at interpreting news. You're going to have to be better at hedging off against something if you're working the after hours market. And then so we have people that take stuff overnight, obviously, and people that just trade during the day. And really, I think the common denominator is smaller size per idea and touching more ideas. Now, of course, if you're listening to the show and you're a pattern day trader, you've got flagged for that, and you've got less than 25 grand, you're going to have a hard time, touching a lot of symbols, as you can only trade four day trades in a week, I guess, right? So, so if you need more capital, I mean, Bright Trading's there for you if you want to go through the hurdles.
That's a good question too, because a lot of people, I say I'm a prop trader. A lot of people don't know what that means. Like, what is the difference between a prop trader and a retail trader? What's the primary difference, and what's the advantages to join a firm like Bright?
Well, there are some obstacles in the sense of barriers to entry. You have to do some exams and so on. But this allows you then to use firm capital, and so you're not subject to regulation T, ordinary margin, or portfolio margin. You get to use firm's capital. So it's your relationship with the firm that governs that. Typically for hedged positions, 30 times your equity and stuff like that is what we allow. And then the second thing is, when you're putting all your orders out there, you don't consume all your buying power like you do in a retail account. So in a retail account, you put a few orders out there and you haven't even been filled and you've consumed your buying power. Well, in a prop account, you're going to be able to put lots of orders out there that doesn't consume your margin, because we don't have margin. We don't have Reg T. We don't have portfolio margin. You're using the firm's capital. Again, pattern day trader rule. I can let somebody trade with 15 grand in their trading account, and they could trade hundreds of symbols in a day, every day, and build up their account like that. So so these are the main things. And also, we don't sell your order flow. So if you're trading on one of these free, no commission brokers, the order flow is being sold. And so, there's arguments about, are you getting the fills that you want? Are you getting the best pricing? Are you always missing those trades? Where are your orders going when you put them in? With a prop firm, it should be direct market access, and that's true prop. So our orders go, in our firm, they go to Goldman, and they execute and clear for us. So,
and then just
so you can choose your venue, right? If you want to trade this symbol on ARCA, you can trade it. If you want to send it over to YBATS, you can do that. You can choose your destination.
You can route your orders. So you can route to where you want to. If you see the offers on ARCA, you can route it directly to ARCA, so you don't have to worry about your order getting pinged around, sent over here and over there, and then missing the offer. So it's direct access is what it is.
That's correct.
So just before we finish the interview, I know you've worked on a product called Stock Odds. Tell us briefly about that and what it does.
Well, it's really hard for traders to do all that they need to do on the research of the news, interpreting news, looking at the macro theme. Very difficult to build a database. So what we decided to do was build a very large database that people could use for their actionable ideas every day. So it's really in the category of predictive analytics. It is obviously based on what is most likely to happen regarding stocks behavior, seasonality, which was really powerful. I mean, the seasonality, even in markets like we are having now in the last two months or so, the individual stocks don't deviate much from their long ingrained behaviors relative to other stocks. So this predictive analytics database allows you to get your actionable ideas for longs and shorts. And so you can assemble baskets and do 100 longs, 100 shorts every day if you want, 10 longs, 10 shorts, things like that. You can trade naked.
All right, bulls are making their move here. Once again, we tried 24.50, just hit 53 back under. So sorry, Rob, I just wanted to pop in there.
No worries.
And that level.
And then we've got education married with that, so we can instruct you how to trade seasonality and then point to the data on what you can use. So it's really education plus data.
Where would you access that if you wanted to?
Send an email to me so we can kind of help you with understanding more of it, and glad to go over things with you guys. So just send an email to me. Rob Friesen.
You can go to stocktrading.com too, right?
You can go to stocktrading.com. They know that well since you've been yakking about it for years. So you can go there and send me an email.
Oh yeah, it's right there. Stocktrading.com. Look there. There you go. That's where you can
shameless,
go.
Shameless plug there, Dennis.
It's behind me. I sit in front of it too much. You can't see it. It's stocktrading.com.
Well, there's a bull within a bear on that logo there, so it is pretty appropriate, right? We go up and we go down by 1,000 points a day.
All right, Rob Friesen is the president of Bright Trading. Rob, we're getting some feedback from the chat that some people wish that their boss were as smart as you, and also we should get you on more, is what people say. So maybe we do that. Yeah, Rob Friesen, president of Bright Trading. Rob, thanks so much for the time today.
They're too kind. Thank you so much.
We get together, Dennis and Rob and I, man, the trading stories and the war stories. I mean, they're fun.
Yeah, the war stories.
We got some good ones.
Trading is a war.
Yeah,
it's true.
Yeah. Okay, Rob.
All right,
guys. Back on again soon. Thanks, Chief. Thanks for getting up so early.
Hey, no worries. We're up anyway. So thanks again. All right. Take care.